All right. Thank you, Dan. So, Megan, if you want to go ahead and skip us forward a slide, we'll go ahead and just give a quick introduction to the group here. Nice to see some of you again. I had the chance to first work with the task force back at the in-person workshop back in June. Had the chance to meet a lot of you on this call and really looking forward to joining up for future work here. Before we get going on our presentation, we just like to take a moment to really introduce the company we work for along with ourselves. I expect some of you probably do know about Zurich, but I would not be surprised if there's a few of you in the call here that really aren't familiar with us at all, Robin. All right. So I think I was saying back when I started with Zurich in 2013, I was not familiar with the company at all or how big they really were, let alone know that they employed almost 1,000 engineers worldwide. In fact, Zurich is a pretty huge company. We operate in over 200 countries and employ more than 60,000 people worldwide between both the insurance side of things with our underwriters, the risk engineers, which Robin and I are part of, as well as our claims department and other support staff. So our primary business at Zurich is acting as a commercial insurer. We insure numerous lines of coverage that range from property, construction, and casualty, the more traditional insurances that you're familiar with, to more unique coverages, cyber, marine, environmental, and more, many that I don't even really have much familiarity with. Zurich does not, however, typically provide homeowners coverages. I want to make that clear from the start, just to differentiate us as a commercial insurer versus a homeowner insurer. But we are the managing company for Farmers Insurance Group, which many of you are going to be familiar with as a very large national homeowners insurance company here in the USA. Beyond insurance, Zurich does have an entire risk engineering arm of the company that Robin and I are a part of. That's also known as Zurich Resilience Solutions. We did a bit of a rebrand in recent years to be known as now ZRS. This group is responsible for providing risk assessments for the businesses that we insure. We help our underwriters select and price risk essentially at the end of the day. Our work also helps our customers by identifying actionable advice that they can actually take to help reduce losses at any of the different perils that we do insure. We have about 1,000 risk engineers worldwide, and about 350 of them are located in the United States. Like I mentioned earlier, I joined Zurich as part of our risk engineering training program back in 2013. I actually graduated with a degree in civil engineering that summer from the University of Delaware, and then almost immediately started working with Zurich at the time, really not having that great of an idea of what does an engineer do for an insurance company. Since then, I've had the opportunity to conduct hundreds of on-site property risk assessments at different commercial properties, focusing on all sorts of different perils that could range from internal fire, putting out fires in warehouses and manufacturing plants with sprinklers, also looking at business interruption, as well as the natural hazards. For the past 4 years, I've actually been a part of our risk engineering technical operations team. This is a team of about 10 to 15 or so people that help to write the different technical standards applied by our engineers. We help understand the emerging risks faced by our customers and learn from large losses after they happen. My focus on that team is 100% focused on the natural hazards, which is really where I found my passion working for this company. And I'm really looking forward to working with the task force because I see there's a ton of overlap with what I do every day, along with the goals that you all have here as the task force. Robin, do you want to take a moment here to introduce yourself?
Oh, thank you, Jimmy. I'm Robin Kemper. I'm a senior risk engineer in the construction specialties group of the Zurich Resilience Solutions. We predominantly work with projects that are insured for project-specific professional liability or builder's risk. Now, a lot of people don't know what builder's risk is. I didn't until I joined the group. And what it is, it's insurance that protects property during construction. So if there's damage of property during construction, you have a builder's risk policy, you can get some coverage. We also, as Jimmy kind of brought up, we lend our expertise to our claims specialists when needed. So I consider ourselves internal, external consultants to our underwriters and claims specialists internally, and then to our clients. I come from the consulting world, so clients, customers, when we're out in the field looking at projects that are under construction. So ultimately, one thing that Jimmy brought up was how we help our policyholders, but we also provide our services to non-policy holders, and that's fairly new. That's been in the last year or two, and that may be somewhat unique about our company. So we are also a consulting arm of Zurich to help those who need our expertise, want to get some more depth into whatever they're doing, and we can certainly do that for them. I look at Jimmy as being part of development, and I'm part of operations. We use the information Jimmy's group develops to perform our work. A little bit more about me personally. I've been with Zurich for over 11 years. But before that, I spent 33 years as a structural engineering consultant, focusing primarily on the design, analysis, and forensics of buildings. I happen to have 3 degrees from RPI, Rensselaer Polytechnic Institute. I have a bachelor's from the School of Architecture. I've got a bachelor's in civil engineering, and then I have a master's in civil. So I currently serve as a governor on the ASCE Structural Engineering Institute board, where I act as the board liaison to this wonderful ASCE-NOAA Task Force. I think now you can understand why I volunteered and said, yeah, I want to do that. And my great, what I call 10 minutes of fame came in 2019 when I had the honor of serving as president of ASCE. So if we can go to the next one. Next slide, please. So now that we've given you a quick look about our company and Zurich and what the insurance world does, let's get into the focus of our presentation. This will revolve around the issues facing insurers and policyholders in regions exposed to natural catastrophes. We will review 2 recent disasters, Hurricane Helene and the LA County wildfires, and use them as a backdrop to introduce how insurance companies both prepare and respond to these types of mega events. Finally, we will try to connect this all with the work of the task force, particularly when it comes to obtaining better data around natural hazards and developing stronger engineering controls for properties and enhancing codes and standards to support better building practices. Next slide, please.
All right, thank you, Robin. So moving on to really the heart of today's discussion. I think a lot of the headlines on this slide are going to look familiar to the group and have possibly even impacted some of you on some level personally. In recent years, we have seen many insurance companies, particular homeowners insurers, exiting high hazard areas, including entire states like California and Florida. Even when insurance is available in these areas, it can be extremely expensive, or coverages could be so limited that it's not reasonable or worthwhile to purchase. As a larger commercial insurer, Zurich is not likely to act in this way and entirely exit a state. It's simply not really feasible for our business model. But property insurance renewal conversations over the past decade or so have certainly become more difficult for those companies with a heavy nat cat exposed book of business. The problems we are facing can be stated pretty simply, but there's not a single answer for insurers or the policyholders. Insurance may cover losses on the first occasion, but what about the second time and beyond? This is when insurance can become more expensive and terms more restrictive, like a deductible increasing or a reduction of the coverages that the insured receives. Unfortunately, this solution is just not sustainable for either side of the equation. It has contributed greatly to the current situation that we're in fact. At this point, insurance really cannot be seen as the only solution for our customers, particularly those with no natural hazards exposures. All of this is why ZRS is trying to work with our underwriters to not just assess and insure the best risk, but also help our customers implement actionable improvements on their properties. Additionally, we want to collaborate with the property owners, engineers, builders, and more, really anybody in the construction chain of command, to help collaborate and develop better codes and standards and engineering controls to eventually reduce losses should they happen again. This includes both physical damages that might occur due to natural disasters, as well as the numerous business interruption exposures that tend to follow these events and can last for years after the fact. As a large insurance company, we want to be profitable. That goal is furthered by our customers doing well, especially during natural disasters. Some of our customers that tend to do the best, they have extremely profitable periods after large natural disasters. I think of our experience with hotels, for instance. Many hotels might be shut down, closed after a natural disaster like a hurricane impacts a beachfront area. Those that are open are often booming in business for the months and years that follow as the only property or one of the only properties that remain open. Those are the success stories that we like to champion and work with our customers so that they can be more resilient in the future. All of this is what Zurich and I, or what Robin and I do at CRS. It's focused on more than just our customers, but also our underwriters and everybody that we work with in our business. Some of our recent experiences with Hurricane Helene and the LA County wildfires really do help to exemplify how we experience natural hazards and how we go about learning from them. And we're looking forward to talking about that in the coming slides. Robin, is there anything that you'd like to add before we move forward here?
No, I think you pretty much covered it. Thanks, Jimmy. Next slide,
Sure.
please.
So you can advance to the next slide, Megan. Thanks.
Thank you. Now that we've explained the problems with insurance in CAT, in case you heard that, NatCat, that's natural catastrophes for those who aren't familiar with our shorthand. And Zurich, just like ASCE, is known for acronyms and many definitions for some of the same ones, unfortunately. So if we're in an exposed region, let's explore some recent events. And this one occurred late September in 2024, Hurricane Helene. And it made landfall, as you can see on the map, in the Big Bend part of Florida. And here, this hurricane impacted millions in the Southeast, resulting in, unfortunately, more than 200 deaths and approximately $80 billion in damages. And I'm not sure that number is, I think that's an early number because people are still trying to recover. This storm produced wind gusts about 100 miles per hour and a storm surge exceeding 15 feet high in the areas around landfall near Perry, Florida. And most of the Florida Gulf Coast experienced some degrees of storm surge while Helene passed. But despite being over 100 miles offshore of Tampa, the storm still produced modern record high storm surges for heights for that particular metro area. And what you can see from this map, you can see the trajectory. And if you look up and look at the colors, the red is still a hurricane. It went all the way up to almost halfway up Georgia when it was still a hurricane. And then it became a tropical storm for the rest of the state. So these very high 100 mile per hour winds and storm surge went quite high into inland. And that's where it had such incredible inland effects. If you could click one more time, please, to the next. Thank you. And did it show up?
One more, I think.
Okay,
there you go.
There it is. So due to a combination of the size and trajectory of this storm, the historic impacts hundreds of miles north where it landed included heavy rains and historic inland flooding for the Carolinas and eastern Tennessee, sustained hurricane winds, force winds well inland, particularly in the high elevations of the Appalachians, and there were tornado outbreaks across several states. Next slide, please.
All right. So just furthering on some of the points that Robin made about the impacts that Hurricane Helene had. One of my roles here at ZRS is really to monitor the weather. This means trying to understand the impacts of forecasted events so we can communicate those over to our customers and help them prepare. I also review major events that we experience in order to learn about what our exposure might be and share loss lessons with our staff and customers. Finally, we also sometimes deploy engineers to disaster impacted regions so we can learn and work on site directly with our customers as they begin to rebuild. For instance, in 2017, I had the opportunity to travel to both Florida and Puerto Rico after Hurricanes Irma and Maria. So putting myself back in my seat about a year ago as Hurricane Helene was making its way inland and making its way up through the Carolinas, I remember some of the extreme messaging that was delivered by the local National Weather Service forecast offices and others about the potential for historic flooding in the region due to the storm. The predecessor rainfall event, or what they call a PRE, this phenomenon was forecasted to occur ahead of Helene, and it was expected that the storm would dump tremendous rain over the time. Ultimately, this event was all too well predicted, and we see some of the extreme rainfall totals reflected in these two graphics that I pulled from a meteorologist I follow on Twitter, actually. From my position, it was very clear without hearing from any of our customers or seeing much on the news at the time that Helene was going to be a mega event for the insurance industry. Simply put, anytime I see rainfall totals that exceed 100-year recurrence intervals, let alone the 500-year to 1,000-year plus totals that we see recorded in some of these dark blue and green shaded areas on this map, I know we're going to have a problem. Even though we might have an image of our head of this area being more rural, mountainous, or maybe less densely populated, There are several very large population centers that fall in these areas like Asheville, Greenville, and Spartanburg that we're going to be dealing with historic levels of rainfall and flooding. Considering that the last similar flood for this region was over 100 years beforehand, and that the modern design standards will simply not necessarily account for this level of catastrophe anyway, it was clear that Helene would be one of the standout disasters for 2024 and the years that followed. Next slide, please. All right, so these photos right here, probably saw a lot of these as we watched the news of Helene and its impacts across the Southeast. These photos reflect the reality of the previous graphics and the devastation that these events can cause over a region. Whole communities are going to be facing years of recovery, whether that's homeowners or business owners. Even some local hospitals might be down for extended periods of time if they can even rebuild after flooding of this scale. Environmental impacts will last decades and affect the local communities along flooded waterways and the communities that exist many miles downstream of those. These photos should probably also raise questions for all of us in the room. For instance, why was a modern hospital built in an unknown floodplain? What level of emergency response planning was available at this location if people ended up needing rooftop evacuation for what was a forecasted event? Were there any enhancements to the waterways or other regional flood protections, like levees, that could lessen the extent of flooding seen across these communities? These are the types of questions that Robin and I ask and hopefully help answer for our customers as they go to rebuild, recover, and learn from these types of mega events.
And
Robin,
just
anything that you would like to add here?
yes, please. And in case you were wondering, it's our understanding that that lower left photo is the hospital that got flooded during Hurricane Helene, and that it's our understanding this hospital is going to be completely rebuilt, but they are going to position it now, this time, outside the 100-year floodplain. This is certainly a positive step and an improvement, but it's still important for us all to keep in mind that moving out of the 100-year floodplain does not guarantee protection from severe flood damage, especially in another event that would be similar to Hurricane Helene. Next slide, please. So Helene caused widespread disruption across the region, leading to business interruptions. Jimmy had mentioned that earlier. This is another aspect of insurance and really what affects people. So where properties themselves might not have even been directly damaged, no damage to the property, but the interruptions like what Helene did, or even smaller storms, can trigger a chain reaction of challenges. For example, rebuilding often becomes difficult because so many people and resources are needed in the same area at the same time, leading to shortages that can impact the rest of the country, not just the region. And from my own experience, working in forensics after Superstorm Sandy, I saw these effects firsthand. During some site visits I took, it was sometimes hard to find available accommodations or open restaurants. In one instance, a restaurant could only accept cash because their credit card system was down. Now, that may sound like not a big deal, but the credit card system is down, the ATM machines are down, and here you are with a younger person who never carried cash in their life. So it definitely has very significant impacts on businesses and just people living in the area. These mega catastrophes like Helene have the potential to upset the entire industries, particularly construction, which is the area I'm in, manufacturing, logistics operations like distribution warehouses. Insurance itself is not immune to the effects of these natural disasters. We are a fiduciary company. A lot of people, I didn't know it, but that's really where our base is. And so we have very strict regulations. And insurance can face severe consequences due to a highly exposed book of business, you know, how much we're carrying. And insurance companies do and will continue to go out of business following these mega disasters. Next slide, please. So the images and numbers tell the story. And Helene was an historic event for this region, and the impacts will be widespread and long lasting. Like Jimmy mentioned earlier, we always want to look back at these events and learn, whether that is learning about better underwriting practices or understanding how losses happen, so better engineering controls can be developed. We always want to be better prepared the next time something similar happens. And Zurich is very active in this space. Jimmy has mentioned this already. We've had teams study major events over the years. This slide shows the cover of a report we published this past April. The conclusions talk about key takeaways and insights for climate resilience. And the next slides will detail some of the lessons we have learned from Helene and other large floods. Next slide, please.
All right, thank you, Robin. So, speaking about some of the lost lessons that we have from Helene and really consistently any of the larger floods that we experience is that flood maps from FEMA and any single source flood map is really only ever going to take us so far. But this is really not a FEMA specific problem. I don't want to dogpile on FEMA here. That's not the intent. I'm very upfront about that. All flood maps are going to have some kind of limitation. And we felt our loss history was reflecting the facts that we were simply not properly assessing and categorizing flood exposed risk. The stat on this slide is pretty staggering. Almost that was down to the number of claims, and over 50% of the dollars we paid out on those claims were occurring outside of recognized FEMA flood hazard zones. This was something that we realized back probably about 10 years or so ago, and we realized that we needed to come up with a better solution, more tools to arm our toolbox, essentially. Even with the most detailed and recently updated flood maps from FEMA, it's going to likely exclude fluvial flood hazards, and it could include or not include unstudied bodies of water. If so many of our losses are coming outside of recognized FEMA flood zones, we made that the assumption that this was down to the fact that there's a growing fluvial flood hazard in the constantly developing world, and perhaps FEMA flood insurance studies are dated and based on climate assumptions that might not be reflect today. At least some of those studies might be. To help make up for this gap, we wanted to take a fresh look at inland flooding, considering more of the possible hazards, whether they're fluvial or pluvial in nature. This is where our Cat Risk Insights platform came to be back in 2020. Without reviewing all the details behind how this flood model is built, it allows our engineers and underwriters to evaluate a property's flood risk considering all hazards, fluvial and pluvial in nature. The model incorporates data from existing FEMA products while also considering historic events and updated hydraulic and hydrologic models that can better reflect current conditions. This includes looking at rainfall scenarios that might be more reflective of future NOAA projections like those in Atlas 15. And hint, we really like Atlas 15 and where we're going with things in that regard, and we really like better data on the whole. I want to reiterate, though, again, this is not about a single flood map being good or bad or how FEMA should do their job. We just needed more intelligence around identifying possible flood hazards. The examples we see on the slide helps highlight why we brought this in. Back in September 2021, one of our engineers outside New York City experienced flooding as the remnants of Hurricane Ida passed by. In fact, many of us in the Northeast probably experienced some level of flooding or impacts from that event. After the storm, she wanted to compare what our CRI flood model had to say compared to the FEMA map for the area. As we can see, the FEMA map would indicate this location is a Zone X unshaded area, or what is defined as an area of minimal flood hazard beyond the 500-year return period. Meanwhile, the CRI map did a really great job indicating the potential pluvial flood hazard along the street, essentially matching what the engineer observed during the storm, about 3 to 4 feet of water maybe piling up, as you can see in this image alongside those cars. The key takeaway here is that insurance always wants to find better data, just like all of us on this call. It's a shared, consistent goal of us. Next slide, please.
So insurance is often located or known for bad news. And obviously, we have success stories. Jimmy has talked about some of them. A lot of people might have seen what happened here. This is the hospital down in Tampa General Hospital. And this is a level 1 trauma center, so very important to the area. And they got protected during both hurricanes Helene and Milton, using a combination of deployable flood barriers, automatic pumps, storm drainage systems. This property successfully kept out storm surge waters during both hurricanes, allowing this critical facility to never stop working. But not all businesses have the capabilities of a facility like Tampa General. But we know there are often many actions that can be taken to mitigate protection flood losses at a property. We support our customers in the regard of recommending improvements for their exposures. And this is true whether it's during construction or during operations. This advice could be as direct as elevating, as we all know, like just elevating the buildings and contents above estimated flood heights, or more involved systems like those that Tampa General did, which involved multiple types of flood protections. And when working with our customers, we always try to recommend controls that are specifically engineered and tested for the hazards they will face. And that's similar to the products that are part of the National Flood Mitigation Certification Program. So even when floodwaters are anticipated to impact a property, there are plenty of measures that can be taken to mitigate losses, such as elevating critical equipment, even if it's only temporary, and wet floodproofing. We always focus lots on the operational controls, recognizing that even the most sophisticated flood control systems may not function properly without planning, testing, and maintaining those systems. Ultimately, we will look at the flood event to learn about what worked well and what could have gone better. And that's where Jimmy's team comes in a lot to help us figure out what we can do to make sure we have that information ahead of time so we can make it work better. Next slide, please.
All right. So after reviewing some of these lessons from Hurricane Helene, I just want to quickly touch base on some of the ways that the task force and the insurance industry have lots of overlap. At the end of the day, we all want to support better building practices, and there are a bunch of angles that we both look to do so. First off is through the improvements in codes and standards and their implementation. Events like Hurricane Helene always bring up questions regarding building codes and how they address construction in floodplains. In fact, I think somebody might have asked one in the chat already. When should this be allowed and what controls should be necessary in order to build in flood-prone areas? Some cities like Houston took very stringent measures after Harvey to require new construction to be over 500-year flood elevations. Beyond the building code, we always know that local infrastructure, are often just never designed to handle the level of stormwater runoff produced in some of these events. A properly designed system, again, may not function properly if it's poorly maintained. We can really get ahead of losses through better codes and standards, and ideally, we would like to see more of this thinking come into play before experiencing a devastating flood event. Another great example of how the task force is supporting Zurich and our customers is through the development and improvement of data sets and models. This includes NOAA's Atlas 15, which I already mentioned earlier, which we're going to see as a great leap forward in terms of making better data available to the engineering community. This data will make its way into the assessments and recommendations offered to our customers by Zurich's engineers. Hopefully, this can help better prepare them for the flood risk of today and tomorrow. Finally, we want to encourage more thinking along these lines, especially when it comes to flood mapping and modeling. In general, we would really like to see more pluvial flood mapping. It's a huge contributor to our flood losses, not just at Zurich, but as the entire property industry as a whole. It's a huge disruptor to day in day life in areas that are exposed to repetitive nuisance pluvial flooding. In general, we'd really like to see these products, particularly in the urban communities and other vulnerable areas. Examples of this can be seen around the country, like the screenshot on the slide of Denver's Storm Drainage Master Plan, which does a really great job identifying areas where pluvial flood inundations have been a known problem based on storm history and losses that have occurred. So really, this was the last bit that I wanted to speak on Hurricane Helene. I see that we've already gone a little bit past time and we haven't been able to touch on the wildfire. Dan, Megan, I don't want to take over the rest of your agenda here, and we haven't had a chance to get any questions from the group either, too. So I'm kind of inclined that we don't continue on to the wildfire, but please, I want to get your opinion here.
Well, I think wildfire is of interest to the group as a whole. If you can give us 2 or 3 minutes, maybe, that would be
Yeah,
fine.
definitely. Yeah, I can make a real executive summary version of this. So if you want to move to the next slide, Megan, we'll speak very briefly about the problem and where we're coming from with wildfire. So we wanted to go into detail about the LA County. Wildfire really extends beyond LA County, but the biggest impacts for us as an insurer and as similar with all of our peers, the Palisades and the Eaton fires were truly historic events that we experienced back in the beginning of the year. Overall, these events are hugely historic, of course, when it comes to California and their wildfire history. They're both going to come in the second and the third most devastating fires for the state, whether you're looking at it that in terms of the structures impacted, the people evacuated, and unfortunately the fatalities from the event. Estimated property damages from these events, and this is just an initial estimate, is about 50 billion, which far in a way exceeds any wildfire loss experience that we've ever seen in the country. When it comes to Zurich's experience itself, about $200 million is our rough estimate, as you see reported here on this headline from this slide. What really contributed to the extent of these fires, $200 million, that's a big total, especially for Zurich when we're not really a residential insurer and that this is a largely homeowners focused event in large part. Well, there's still lots of commercial property in these areas. We are burning fires in some of the most densely packed areas of land in the entire country, LA County. You see the graphic on this slide visualizing the burn area. It exceeds in size, some of the biggest cities that we have in the country. Next slide, please, Megan. And now this next slide is really going to focus on what we see to be the problem here in the insurance industry, and that is properties getting a little bit too close to that wildland urban interface, or the WUI. Without going into the technical terms, I'm sure a lot of people on this call have a good grasp on what the WUI and is why that's such a high area of risk. But we find that there's more and more community growth rushing against that interface, which is essentially the vector that's going to allow wildfires to spread fires from the wildland area over to the built world, where we can have these uncontrolled conflagrations like we saw in the LA fires back in January. Of course, there's many factors that need to stack up for these fires to occur. Extreme relative low humidity, periods of drought usually leading up to it. The Santa Ana winds, of course, were a huge factor in allowing the fires to spread rapidly and reducing firefighters' capabilities when it comes to fighting those fires for several days here. But nonetheless, the main channel that allowed those fires to spread uncontrollably was the significant chain of combustibles that exist once you move into the developed world, essentially allowing fire to spread house to house to house, whether that's through direct fire spread or through embers. Next slide, please, Megan. Now, how are we looking to get ahead of this problem? So one key way that we look to get ahead of this is with our work with IBHS. I think a lot of people in this group are familiar with IBHS, so the Insurance Institute for Business and Home Safety. They do lots of research into the natural hazards, understanding how natural hazards like wind, wind-driven rain, hail, wildfire, all impact built structures, whether those are residential structures like homes or commercial structures like retail stores, single-story office buildings or warehouses. Any type of commercial structure, they have done typically some level of testing on it. Now, IBHS, they're not just doing research to burn things down, they're learning how these things can survive events as well. They put together sets of building standards that collate and collect all these different resources and better building practices, whether that's their Fortified program, which is directed towards wind, hail, and other severe weather like that, as well as their Wildfire Prepared Home program, which is really looking how can we build more wildfire resistant homes along with wildfire resistant communities. The rest of the neighborhood needs to be wildfire resistant if you really want to benefit from it as a homeowner yourself. Some of the really tangible actions that homeowners can take are highlighted on this graphic right here. We really like this advice because it's applicable not just to homeowners, like installing ember resistant or fine metal mesh vents to prevent embers entering inside the eaves or other openings within a structure. This advice is also translatable over to commercial structures, which is the bread and butter to what Robin and I work with doing our work here at Zurich. All right, next slide, please. And then just one final point with wildfire, modeling and data. It's a huge area where we noticed a lot of shortcomings in our existing models. Now, it's going to seem like I'm, again, unfairly targeting the publicly available models that are put out there by our government agencies like the U.S. Forestry Service, and that's likely unfair, but I'm only showing you what I can easily show you here among the group. Unfortunately, the issues with these models extend to all of the models that we tend to use as insurers as well. This is not a U.S. Forestry Service specific problem, what we're highlighting on this slide. But essentially, what a lot of wildfire models tend to do in our experience, especially looking back at events like the Palisades and Eaton fires, these models greatly underestimate the wildfire hazards that exist within the built community. And what I mean by that is they do a great job highlighting the wildlands. You see these areas shaded in red and orange on this slide. Those are forested areas. Of course, as we might expect, forested areas in California, they're typically pretty ripe to burn, and those fires can grow relatively rapidly if the right conditions exist. Unfortunately, our concern, especially my concern as a property insurer and as many people who live in this area, their concern would be what happens when that wildfire crosses over into the built world, once it crosses over that WUI. Well, lots of these wildfire maps would tell you that those areas are unburnable, that they're deemed low risk, that they don't represent the same potential as maybe the forested regions that they neighbor. Unfortunately, these communities brush right up against the forested communities, and that's where we're receiving our worst losses when it comes to wildfire. So long story short, we want better data to support wildfire modeling and our understanding of where these risks lie. And then final slide, Megan. I think, Robin, you'll just hit up a few quick points maybe to sum it all up for us and ask
I'm just gonna, because we're out of time, I'm just gonna say what I like to say is insurance is just one tool in your risk management toolbox. It's not intended to cover every possible loss. Even if your direct costs are covered uh, due to an event, a slow or inadequate response to an event can have far-reaching consequences, such as damaging your reputation or, in the worst case, threatening the future of your business. So timely recovery for both your organization and your community is essential for long-term resilience. So now, if we have a few minutes, it's time for questions.
Yeah, no, thank you, Robin. Thank you, Jimmy. I appreciate it. I think we're in good shape. I see John Ingargiola has got his hand up, so we'll start with you, John.
Hey, thanks a lot. A great presentation and great data. The one about 90% of Zurich's claims and 50% of the losses are outside the special flood hazard area. You mentioned a number of times the support for better building codes and standards. Have you thought about that or plan to take action? Here in this committee, many of us support the ASCE standards. I put it in the chat there. The ASCE 24-24 flood design and construction standards answers a lot of these questions and increases the level of protection. But that standard is not going to do any good if it doesn't get incorporated into our model code. So with Zurich and its flood engineers, come alongside and ASCE in the ICC code hearings next week. I mean, the data that you're presenting is truly helps ASCE's case that the flood risk is not confined to the special flood hazard area, and that the current flood risk levels are totally inadequate, basing everything off of the 100-year flood.
I think, John, to simply answer that, yes. I think that would be an awesome opportunity for us to work together. I'll make a note that you and I can connect maybe after the meeting sometime soon and talk about how we can support you in that, because that's definitely the avenue that we like to take to try to get everybody's goals furthered here. So we can work side by side in that regard, definitely.
That's awesome. Dan, thank you very much. I don't see Jennifer Gopil on today, but obviously we want to get Jimmy connected with Jennifer and Jeanette as they're putting together the plan, the strategy, the testimony for the October code action hearing. Thanks very much.
Yeah. And Jimmy, I can help you get in touch with them. Jennifer couldn't make it today.
Awesome. Thank you, Robin.
All right. That was a good exchange. Dan Barry, I see you've got your hand up.
Yeah, thanks, Dan. And thanks for the presentation, Jimmy and Robin. I have a general question and a specific question for you. The specific one is I'm curious about the utility of prediction information on more medium timescales, like 2 to 10 years. I have some idea of how that could lead to different short-term infrastructure decisions, but I'm curious for like your capital considerations in the firm, how having some positively skillful information looking ahead, on those kind of medium term, like a little bit shorter than a climate change signal, but a little bit longer than a weather signal, how that might be useful to your business. And then the more broad question from a NOAA perspective is what kinds of data, products, services you'd like to see NOAA produce more of to support your business. Thanks.
I'm going to take the second one first, Jimmy, and then let you go and have your say. Just real quick, and I don't know whether this is totally NOAA, but I was involved with a project with one of our clients, and we were looking at different risks, having to be construction sites. And one of the ones I could not get any data, at least not in a format that could use, like you put in a geocode and you get your answer, okay? And it had to do with air quality. And you can get air quality on a daily basis, and you can do that. But we're looking at a region saying, well, is there anyone who's doing out there taking these data points of when it's bad, when it's good, because I think some things have to do with geography, that some areas may be more of a problem just because they're in a bowl or whatever. That we could have a tool that we put in an address or a geocode, and it says it's a low risk, it's a high risk, whatever, based on what people agree to is that point of what would be good air, bad air, and then a few points in between. So that's just one thing I tried looking for over a year, and I spoke to a few NOAA people, but I just really couldn't find it. I'll switch it to Jimmy now.
Well, that's really helpful. Just to follow up on that, can you give me a sense of like what the application space is in your business for that?
Well, it's just another factor that comes into, for my personal side, it wouldn't be so much, but it definitely could have something to do with our casualty properties. It have to do with safety, and that's people's safety. If it's going to be maybe a high risk area because it's known for having more bad air days, or however, again, it's some kind of global definition of how you categorize it.
Yeah, that's great. Thank you, Robin.
Jimmy?
Yeah, those are great points, Robin. Yeah, and I think the both of us probably do uh, a really good job of underselling the casualty focused side of our business, because Robin and I are both so focused on the built property, the construction world. We do a lot when it comes to insuring and keeping people safe too. So I think those are great avenues to bring up here as well. Heat illness, air quality, they are both frequent considerations from that group. Dan, to your first question about kind of short to medium term projections, we're not on the insurance side of things necessarily, but I dialogue with them quite a bit. In general, they tend to not make uh, lots of decisions based on those kinds of time frames, right? Because they don't want to be surprised. I think sometimes, and it's not quite exactly what you're bringing up, but we'll get always very excited about the hurricane season forecast year after year, right? And say we get the odd year where it's forecasted to be below normal activity levels. That's not a sign for our underwriters to start loading up business in Florida, Puerto Rico, the Gulf, and other exposed regions, right? But when there are reliable trends that we can point to and learn about and say that, hey, we see that risk is shifting. I think particularly about wildfire, which I view as one of the more dynamic hazards that we face, because the hazard areas can legitimately change frequently because of conditions. That's where we might be more of interest having that data and might be able to give us better intelligence. The wildfire hazard in the Palisades area, for instance, is not going to be the same as what it was for maybe years to come now. Again, not saying that that's how our underwriters will necessarily act, but it's good information to consider.
Great. Thanks, Jimmy.
Yeah, thank you.
Joe Bersugli, last question.
Oh, I'll try to make it short then. So,
No.
when your examples of the wildfire in LA and also the floods in Asheville area and others that I've, become familiar with, for example, the Marshall Fire in Colorado. These are often compound events. And, in LA, it was a particularly bad Santa Ana plus what's called a mountain wave, so very, very rare. Last time it happened, it was wet, but this year it was dry. Same with the Marshall Fire. We get winds all the time, but it was very dry. And I'm kind of curious. I'm very suspicious that these high-end statistics, like thousand-year events, they're very uncertain. So I'm curious if you thought more about this idea of compound events and how you want to deal with them in insurance.
I think you're speaking to some of the where we're starting to find some of the holes, Joe. I think that fact that wildfire is often a compound event, right? And we use these models, or we put so much faith in certain models that might be completely blind to some of those other factors, whether that's the factor of how uh, drought changes year after time, with time, how vegetation levels change with time, how the built world changes with time. All of those can change so frequently, and they all factor into the event and sometimes compound upon each other, like you're talking about there. So I think we are looking to get more informed in that regard, because I think we're seeing that, if, in my opinion, if we were to rely on one of these wildfire hazard maps and simply bought business and where it was low and ignored it where it was high, we would just continue to run into the same problems over and over again as an insurance industry, and for the people that we insure. So I think to your point, Joe, we're seeing that and we want more.
Yeah,
Sorry,
and
Robin.
I just want to interject for a second here that yes, some of our underwriters asked us about that. Well, sometimes you say compounding, and there's also cascading, and they're definitely looking at the combinations of these effects, combinations of the hazards. So yes, people are looking at it. I don't know how far they've gotten. That's more from the underwriting side as far as what they're looking for, and then they come back to the engineers trying to get the answers. So,
I'm just suggesting they need to come back to the climate scientists as well on these things because
right.
it's something
I
that
think
we're
we
just
have a
starting to
few
grapple with,
in
quite
our
honestly.
organization.
Hmm.
Totally agree. We may have a few in our organization, but we always need, the wider viewpoint and all that research that's going on.
Bilal?
Yeah.
I put two questions in the comments. Historically, engineers and designers and architects and so on dealt with fire by detection. And I think we are starting a project in Sicily funded by the government to basically on early detection of wildfire. And I know that there are systems in place, whether it's satellites and cameras and so on. But I think maybe we need more to link that to insurability and insurance. So that's one item, which is the early detection. The other item is crime, wildfire crimes, and I know in the fire arena, this has been an item always that's pursued carefully because it does affect insurance. And in I know in Sicily, most of the wildfires, they are crime related, they are intentional. Actually, the head of emergency that I had meeting with last month indicated that explicitly. He thinks that they are all intentional. And he showed me recordings from cameras with people in a minivan just going from one spot to another, driving casually, comes out from the minivan and started a fire and goes to the next spot and keeps doing that. So there is big interest in crimes against nature and basically, if I may call it wildfire criminology, which needs to be really understood from behavioral sciences and what could be done about it and how it could be criminals could be basically pursued in this regard.
So I do know that we have partnered. And I'm looking for it, Bill. I'll see if I could find the company that they have participated in what we call our innovation championship, basically like a startup kind of sponsorship type competition. And their focus was wildfire detection. And I think it used a variety of technologies, satellite and maybe more local eyes detectors too. So if I could find that, I will share it. Um, we see that as something that's beneficial to the broader community, let alone individual insurers. So definitely something we're supportive of. On the criminology side of things, that is a deep topic you're getting into there, and we're getting into psychology and everything beyond us engineers on the call. Now, when it comes to that, I will say that I often parrot the statistic of it's always between 80 to 90% of wildfires being human started. So I agree it's a problem. How does that impact our losses at the end of the day? I doubt we're subrogating them, right? I doubt we're going back to that person and they're responsible for the claim. So we're still paying it out. It's still a big deal to us. I think our message is wildfires will start, whether human made or intentional. What are the actions you can take if one starts to threaten your property or if your property could be threatened by one?
Thank you.
Willie?
Yeah, I'd like to go back to Joe's point about cascading, compounding effects, and he's absolutely right. I'm happy to hear that Zurich is looking at it. It's a very difficult topic to address, and think about it. As my experience as an underwriter, I mean, it's easy to say, "Hey, this may happen," but then how do you rate it? And as head of the audit committee for a good sized insurance company for 13 years, I learned that actuarials don't think like that. That they have a very hard time sort of putting numbers to these high impact, low frequency events, especially when there's compounding or cascading effects where, as Joe said, in one year, it happened, but it wasn't exacerbated because it was dry or it was wet or whatever the circumstances. So it is complex, but I'm happy that people are looking at it. I know that my my influence on the property resilience assessment standard that was published by ASTM includes folks looking at compounding and cascading effects and advising clients and users of that risk.
All right. Thanks, Willie. I got one last question. It's probably a little bit of a naive question, but I think many of you know, we had a lot of discussion at the ASCE-NOAA Task Force workshop meeting. It's a subject that I brought up several times, and that's kind of better understanding how market forces play a role in this. And the question I have is, I know that residential insurance pricing can be very heavily regulated in some markets. Um, does that hold for commercial properties as well? I mean, how much flexibility does Zurich Re or another carrier have to more, in their opinion, more accurately price the risk, and therefore, like I guess, can you comment on that in general? Because to me, understanding risk is one thing, but it's that what's the economic signal or the economic incentive to adopt more resilient engineering practices or adopt more resilient, property construction. So I was just wondering if any of you had any response to that.
Well, Dan, all I can say, and I'll flip it to Jimmy, is that is always the question we're asked. Well, if we do this, will our insurance cost less? And the answer I always get from everybody who's doing the policies, the underwriters, this and that, it depends. That's not the answer you want to hear, but that's what we get. There's no out there formulae that will absolutely make a difference. Jimmy, do you have better input on it? Because I don't know. The underwriters have lots of models they use too, tools that you put the various variables in, factors and outcomes, what the risks are, and even affects how they cost and price things. So, Jimmy?
Yeah, so I can just say in general, Dan, I mean, it is a constant battle that point. Which map is going to be applied? How does that impact rates? What can and cannot it do? Take the validity, accuracy, all those points, just put them aside. That fight continues, and what's going to continue, especially among insurers in states like California and the ones that we were talking about earlier, basically. So I know that is a constant battle. Certain states like California is pretty restrictive when it comes to the wildfire insurance rates and how they can be shifted year after year. So we're probably not. I'm not the expert to speak into that in more detail. If that's something that the group would be interested in learning about, we definitely have loads of that expertise more on our underwriting and accumulations management side of the business, and we could get them to speak on a future task force call.
Well, I may take you up on that. I mean, I don't know how everybody else feels about it, but I mean, I think that's kind of at the heart of some of the discussion we've been having. If changes in engineering practice or construction practices add to the cost of property, what's the incentive there? But I know Willie and I have talked about this a lot. Willie, do you have a comment?
Yeah, I think that one of the things that was part of the question, which we haven't addressed, is how do the insurance regulators look at climate resilience with regards to what their expectations are? And up till recently, their expectations have not. I can't tell you how many meetings I've been with insurance commissioners in California and Colorado, where the paper was written for the company I was with, that talk about, and they never talked about climate resilience really, but now they are. And the National Association of Insurance Commissioners, NAIC, has put together a task group and a group to work on climate resilience for the insurance commissioners and help them get a grip on it, because that's coming. It's coming. So just a heads up that it's something they are thinking about, and NAIC has taken a lead point role in starting to put together information, doing modeling themselves, and providing the insurance commissioners with this information.
And I just want to tag on to that. I mean, that's for the future, although we need it right now. But what we tried to say in our presentation is that you may be insured right now and then an event happens. Well, try and get reinsured, or that's the wrong term. Try and get insurance the next time. That's when everything starts getting it's more money. Your exemptions are bigger, higher deductibles, all sorts of things. The actual policy itself is not as good for more money. Okay, you don't have as good coverage. So if you start putting in those resiliency aspects into your project into the future, that may help you reduce the cost because recognize that as being a positive. Otherwise, without it, just to say, okay, well, that's the event, we're up and running again, so we need insurance again. No.
But Robin, and I don't mean to tease, but it sounds like it depends.
Well,
Like,
that's
yeah,
what we
try to get
hear.
reinsured, try to get insurance again. If you do these things, maybe it will help. I mean, I guess that's where it is a bit of a challenge. I can see that.